Welcome back to my weekly analysis. Like I told you in my previous video, I am going to be sharing with you my weekly analysis on how I trade the forex market every week. And like I said in my previous video, I'm going to be sharing my strategy with you guys every weekend so that you know how I trade the forex market. Like I said, I trade gold, SAUUSD. That is the only pair that I trade. And in this video, I'm going to show you how I was able to make over $10,000 this week trading just one pair with one trading strategy. Like I told you, I only make use of one trading strategy in all my trading, and that is what I teach in my videos, right? There are several trading strategies that you can learn, like the Fibonacci retracement, like the RSI, like the MACD, so on and so forth. There are so many trading strategy that you can master, but for me, I think the moving average still remains the best for me. So what I do, I combine the moving average alongside with support and resistance. So I am a trend follower, I'm a scalper, a day trader, and also a trend follower. I always trade in the direction of the trend. So what I do, I look at where the market is heading and I trade in the direction of the market. So that is why I make use of the moving average, because the moving average will help me to know where the market is heading to. If the price is above the moving average, I will know that the market is heading up. And if the price is below the moving average, I will know that the market is heading down. So I use the moving average as a tool to help me to be able to predict where the market is going. So I combine the moving average with support and resistance so as to have a better high probability trading setup. So when the market is in a range, I use the horizontal support and resistance level to look into my entry. So when the market is ranging, I draw a horizontal line at the highs and the lows so as to be able to trade the range. And when the trend resumes, I still implement my moving average. So during a trending market, the moving average acts as a dynamic support and resistance level, right? So during an uptrend, I use the moving average as a support level, and during a downtrend, I use the moving average as what? A resistance level. So I wait for price to come to my area of value before I place a trade. And I also use the moving average as a breakout tool. And what is a breakout tool? A crossover. If the price was previously in a down move and suddenly the price now reversed and crossed above the moving average, I see that as a breakout. So what I do, I will not change from selling to buying because the trend have reversed from down to up. So the moving average does so many things for me. And if I combine it with price action like support and resistance, I have everything I need as a trader. So I don't need searching for other indicators, other strategy. I am comfortable with my trading strategy. And that is why I've been using this moving average trading strategy for a very long time. So right now, I'm going to share my screen with you guys and show you how I trade using the moving average and my weekly analysis on this week. So here is my screen. So if you look at the 4-hour time frame, you can clearly see that the market is in an uptrend. If you look at this, the 4-hour time frame, this is trading view, and we are trading gold. So this is the 4-hour time frame. The market is in an uptrend, right? Because the price is respecting the 20 EMA. So this black line is the 20 EMA. So when you watch clearly, you see that whenever price makes a pullback to the 20 EMA, it gets rejected. Whenever price makes a pullback to the 20 EMA, it gets rejected. So the 20 EMA is acting as what? A dynamic support, right? It's acting as a dynamic support. So I do my top-down analysis starting from the 4-hour time frame. So with the 4-hour time frame, I can clearly say that the market is in an uptrend. So this red vertical line is what I use to identify the week, right? Like the week started on Monday 15th April and ended on Friday 19th April. So this is where the week started and this is where the week ended, right? So now that the week started here, I have confirmed that the market is in an uptrend. So this 20 EMA now serves as an area of value for me. But if I head down to the lower time frame, I will not be able to get this 20 EMA again at this particular spot. It will be in another spot. So for me to be able to maintain this level, I'll have to plot out what a trend line. I will use a trend line to connect the lows so that it will rhyme like the 20 EMA, right? So this is it. So I will now use a trend line to connect the lows, right? So this will now act as a dynamic support level for me, right? Because in the higher time frame, like 4-hour time frame, the 20 EMA is acting as what? As a support level, because the market is clearly in an uptrend. But for the fact that I cannot get this level at the lower time frame, I have to use the trend line to connect the lows, so that when I go down to the lower time frame, I'll be able to get these levels. So now that I've been able to draw the trend line, I will now head down to the 1-hour time frame, right? So this is the 1-hour time frame. Right? So with the 1-hour time frame, I can clearly see the levels, right? So this is the level that was drawn on the 4-hour time frame. This is the level that was drawn on the 4-hour time frame, right? So for the fact that the price is still above the 20 EMA at the 4-hour time frame, it is a confirmation to me that the market is still in an uptrend, right? So what I did, I confirmed the trend line at the 1-hour time frame, meaning that the price is heading up, the market is still in an uptrend, right? So like I said, this vertical line indicates the week, just the week that went by, starting from Monday 15 April to Friday 19 April. So you can clearly see that the market is in an uptrend. Now I will now head down to the 30-minute time frame. So this is the 30-minute time frame. You can still see that the price is still respecting the trend line. Now you can clearly see that the moving average is not the same as it was at the 4-hour time frame. You can clearly see that the moving average is not the same as it was in the 4-hour time frame. That is why I use this trend line for me to be able to know directional movement of the market, right? So at the 30-minute time frame, I can still see that the price is still respecting the levels, right? The price is still respecting the trend line. So whenever price comes, it get rejected, comes, get rejected, comes, get rejected, right? So now I head down to my time frame, which is the 15-minute time frame. So this is the time frame that I use for my entry, right? So this is the time frame I use to place my trade, the 15-minute time frame, right? So this is the 15-minute time frame, and this is the time frame that I use to place my trade. And like I told you, I trade based on crossover, right? Whenever there's a crossover, I take a trade so that I'll be able to get so many entry and I'll be able to make so many profits. Like I said, I am a day trader and also a scalper. So I'm a mixed up of both a day trader and a scalper, right? So my first take profit acts like a scalper, while my second take profit acts as a day trader, because my first take profit is just 40 pips and I can get it within 30 to 40 minutes. Why my second take profit, I will hold throughout the day. I will hold on to it, maybe from morning till night. I will hold on to it. Maybe before I close or before the market close, I will just close my trade. So that is how I trade. So like I say, I always place two trades. I set one with a target of 40 pips, while the stop loss is always 20 pips, and the second trade I will hold, right? So I wait for a crossover before I can close the trade. So if you watch clearly, you will see that the market is clearly in an uptrend. So this trend line has already confirmed that the market is clearly in an uptrend. So this is where the price, the market opened. This is Monday 15 April. This is where the market opened, right? And for the fact that I've drawn this line already, so I'm waiting for a price to make a pullback to this trend line for me to take action, right? So now for the fact that the market is going down, you can see the down move. This is a clear down move, but at a higher time frame, this is a retracement, right? So this is a down move. So Here, if I was here, I will be able to cash this move because I trade based on crossover. So as the price crosses below, I take a sell trade, right? So for the fact that this line has already been identified as a strong support level at the higher time frame, I wait for the price to come here for me to take my profit. So this is the level where I take my profit if I'm selling. This is where I take my profit. So as the price rallied down, once the price gets to this level, I take my profit because I know this is the lowest point that the price can reach, right? So you see that the price went down, then gets rejected, then comes out here, get rejected, right? So since I opened my trade here, this is when I started trading for this week. I waited for the price to come down to this level. So the price came down, broke a little below it, and then rallied up again. So when I confirmed that the price is now heading up again, I knew that the retracement is over. So I placed my buy trade somewhere here and my stop loss somewhere here. So in the process, the price crossed over and my first take profit, which is 40 pips, was triggered, and I had to hold onto my second trade for a crossover before I can close it. So this is where the crossover happened, and I was able to close my second take profit. So if you watch, you see that there was so many profit for me. Let me just enlarge it. Okay, so this is where I took my second take profit. So I entered my trade at the close of this green, this long green. This was called the bullish engulfing pattern. So I closed my trade. So I placed my trade at the close of this long green, right? And my stop loss was below this trend line, right? So my first take profit, which is 40 pips, was triggered somewhere here, and then I was able to break even. So I took my stop loss to my entry. Then I had to hold on to the second trade until there was another crossover here. So after the crossover, I closed my second trade. So I had to place a sell trade because a crossover has already occurred here, which signifies a change of trend at a lower time frame. So I placed a sell trade here, and I know fully well that my take profit should be somewhere here because I know that the market, this is the lowest point that the market can get to, right? So my take profit should be somewhere here for my second take profit. So my second take profit should be somewhere here. Why my first take profit is always 40 pips. So when the price hit my first take profit, I broke even, and then the price could not come down to this point. Instead, it reversed and then went up and hit my break even. So another crossover occurred here, and I placed another buy trade, right? So bear in mind that I still have pending orders here, right? I have pending orders at this level because this is clearly a support level. So I'm using these ones for my normal scalping. So bear it in mind that I'm using this level as a pending order. So I place pending orders at this level because I know if the price comes, it will trigger this level and continue heading up. So I put a pending order somewhere here, and my stop loss will be somewhere here. So my pending order is always here. I always leave a pending order here at this trend line. So as the price is moving, I'm always shifting my pending orders so that it will rhyme with the trend line. In case if the price makes a pullback to the trend line, it can trigger my pending order. So in that process, I'm still scalping, right? Because if you watch this, I was able to get this trend line at the higher time frame, which is the 4-hour time frame. So it will take time. It will take time for the price to come back to this trend line. So as a scalper, I don't have that patience to wait for the price to come down to this level. So I had to make use of my trend, my crossover, right? My moving average crossover. So that is how I trade. So when the crossover happened here, I placed a sell trade, and then my stop loss was above the 20 EMA, and then my first take profit was 40 pips and second was hold. But since the market is heading down and I know this is the lowest point, my second take profit was somewhere here, right? So for the fact that the market couldn't reach here, it reversed and then hit my break even, and then another crossover occurred and I placed another buy trade. My stop loss was somewhere below here, and I was able to catch this move, and then the price came down, hit my break even, and then another crossover happened here again, and I placed a sell trade, and my stop loss was somewhere here, and I was able to catch this move. and that crossover happened here. I placed a buy trade, my stop loss here, I was able to catch this move. Another crossover happened here, placed my buy trade, stop loss here, I was able to catch this move. And this another crossover, I placed a sell trade here, my stop loss above here, and I was able to catch this move. So in the process, the process, the price came to this level, very close to the trend line. I was able to close my second trade here, right before the price now rallied up. But unfortunately, this price couldn't get my pending order because my pending order was exactly at the trend line, so the price could not get to my pending order. So this is where the price got to my pending order, right? So you see that the price made a pullback to the 20 EMA, right? And once the price get to the 20 EMA and then got rejected, right, I placed another sell trade. So I placed a sell trade somewhere here because this is a bearish engulfing pattern. This is a bearish engulfing pattern. So I placed a sell trade here, and my stop loss was above the 20 EMA, and this was my take profit. My first take profit was 40 pips as usual, while my second take profit was at this trend line because I know this is the lowest point that the market can get to before it reverses. So luckily for me, the price was able to hit my second take profit, and then it automatically triggered my pending order, my pending buy order. So once the price goes down, it triggered my pending buy order, and my stop loss was far away from the trend line somewhere here. And luckily for me, the price rallied down but couldn't get to my stop loss, and then it reversed and started heading up. So once my first take profit was triggered somewhere here, I broke even. I took my stop loss to my entry, right? So I was able to ride this trend with that one trade. So for the fact that the pending order that I placed here, I was able to ride this trend, I still had to place another trade at a crossover here. So when the crossover happened here, I placed another buy trade, and my stop loss was here while this one was still in progress. So I was able to cash all this move. So when the price makes a pullback again to the 20 EMA, I placed another buy trade and my stop loss below. So I was able to cash this move. And have it at the back of your mind that I always have break even whenever my first take profit is achieved. So the essence of the break even is in case the price goes a little and reverse, it will not hit my stop loss, rather it will hit my break even. I don't want to lose the little profit that I've made, and I also want to protect my capital. So that is why I always take break even seriously while trading. That is why each time I hit my first take profit, I always break even. Very, very important for me. So if you watch, you see that I was able to catch this move, and the price, then this long red came down and hit my break even, right? Then I didn't lose, it just hit my break even. Then another crossover happened somewhere here. I placed another buy trade. My stop loss was below here. I was able to catch this move, so I broke even. The price came back, hit my break even, and I saw that another crossover happened here. I placed a sell trade, and my stop loss was somewhere here, and then I was able to catch this move, right? So the same thing applicable. I saw that the crossover has happened. I placed a buy trade here because this is a very powerful long momentum candle. This green tells you that the buyers are very much alive. They are very active in this market. So I placed my buy trade here, and my stop loss was somewhere below here, and I was able to ride this move. So the price went up and hit my first take profit, and I broke even, right? So the price went all the way to this point, then came down and hit my break even. And what happened? Another crossover happened. So the price crossed below, makes a pullback, and I placed a sell trade, my stop loss above, and I was able to ride this trend. So the price now reversed again after hitting my first take profit, and then came up and hit my break even, right? And I waited again for another crossover, and here is the crossover. And that crossover happened here. I placed a sell trade, my stop loss above, and then the price rallied down and hit my first take profit, and I broke even. Have it at the back of your mind that this trade is still in progress because I was holding onto this one as a swing trader, right? So what I was doing was just shifting my stop loss gradually. So I was still holding onto this one trade. So I still placed another pending order at this trend line. So when the price now got to this point, I took my second take profit, and automatically the price hit my pending order, my pending buy order, and I was in the trade. So I now have two pending order which was gotten from this trend line, right? So as the two pending order was going, I was still also trading my scalping strategy. So it was a mix up of both scalping, day trading, and swing trading. So you know that swing trading comes once in a while, not all the time. It takes time before it happens. So if you check the distance between here and here, you will know that it takes time before an opportunity came. So that is why swing traders takes time for them to be able to get an opportunity to enter, but a scalper and day trader has so many opportunity to place their trade, right? So this is it. So the price came down to the trend line and automatically smashed my entry, automatically triggered my entry, my pending order, and then the price entered automatically, which is a buy trade. My stop loss was somewhere below the trend line, and then I was able to ride this move. So I also waited for a crossover. So this is where the crossover happened. This is where it happened. This green, it first crossed, makes a pullback, and this is the red, and then rallied up again. So I placed a buy trade at the close of this green. I placed a buy trade here, and then my stop loss was somewhere below this moving average, right? So I was able to ride this move, right? So my first take profit was also triggered somewhere here, and then I was able to ride this move. So what I did was I closed my other trades which I placed after a crossover. I was able to close them, but the ones that I placed as a pending order at the trend line, I hold on to it because I was using that one as a swing trader. So that one was still in progress, right? So I was hoping that with that one I can be able to ride the higher time frame trend, That is my plan, because I entered the trade somewhere here and the second one somewhere here. And if you go to the 4-hour time frame, this is clearly a support level at the 4-hour time frame. So I was hoping to use this level I was hoping to ride a massive trend at the higher time frame. So that is why I was still leaving the 2 trades that I placed based on pending order. But the ones that I was using to scalp, I was able to close all of them before the market closed on Friday. So this is how I trade. Like I told you, I make use of both a scalper, a day trader, and a swing trader. So I'm a day trader, I'm a scalper, and I'm also a swing trader. So I use the same strategy, which is the moving average, and that is my best trading strategy. So this is how I trade the forex market. So let me show you my weekly analysis on the profit that I made this week. Like I told you, I made over $10,000 this week. So this is it, right? My capital was $20,000, and I was risking just 2% per trade, which is $400 per trade. My stop loss was 20 pips, while my first take profit was 40 pips, and my second was hold. So on Monday, 15 April, I won 3,103, and I lost 1,025, and my profit was $2,078, right? There was 5 crossover, and I had 16 trades. So I placed a total of 16 trades that day. Then on Tuesday, 16 April, a total of 20 trades was placed. I won 3,603, and I lost 2,050, and my profit for that day was 1,553. Then I lost 10, I won 10, right? But because of my risk reward ratio, I was still in profit. On Wednesday, being 17 April, I had 26 trades. I won 5,656, I lost 1,756, and at the end of the day, I made a profit of 3,899. So there was only 4 crossover at the lower time frame, that is the 15-minute time frame, and I placed 26 trades. So I won 17 trades and I lost just 9 trades. On Thursday, 18 April 2024, I had 26 trades. I won $4,503 and I lost $2,516. So my total profit for that day was $1,986. So there was 8 crossover and I had just 26 trades. So in that trade, I won 14 trades and I lost 12 trades. So on Friday, being 19th April 2024, I had 24 trades. I won $3,554. I lost $2,516, and my profit for that day was $1,037. So there was just 5 crossover. So out of 24 trades that I took, I won 12 trades and I lost 12 trades. So my risk reward ratio is what is helping me. So for the fact that I have a better risk reward ratio, I still ended up in profit. So at the end of the week, I made my calculation. I had a total I won a total number of $20,419. So I won $20,419. That is to say, I won 64 trades and I lost 9,864 trades, meaning I lost 48 trades. So the total result, that is my total profit, was $10,554 for that week. So total number of trades that I took in that week was 112 trades, while the total number of crossover that occurred in that week was just 28 crossover. So I made a total profit of $10,554 in a single week with my trading strategy, which is the moving average. This is the simplest trading strategy that anyone can master. So my advice for you guys is to go to your demo account and backtest this strategy that I've taught you in this video, and I promise you, you are going to master it in just a matter of time. This is the simplest trading strategy that any forex trader can master. So don't stress yourself looking for complicated strategy. Simply use a simple trading system alongside with the right psychology, and you are going to become profitable in the forex market. As long as your psychology is in check, as long as your greed is in check, as long as your emotion is in check, as long as you are consistent with your strategy, as long as you are implementing your trading plan consistently with this simple strategy, the sky is your limit. So like I said in my videos, don't risk more than 1% or 2% of your trading capital if you want to last long in this business, because this business is all about consistency. So money management still remains the number one tool of becoming successful in forex trading. So ladies and gentlemen, that is all I have for you in today's video. I hope you love this video. If you do, give us a thumbs up. Don't forget to subscribe to my channel for more educative content like this, and also don't forget to turn on the notification icon to be the first to be notified whenever I publish new update. I will see you again next week for my next update. Enjoy the rest of your day. Bye.